Hello, and welcome back to the Vancouver Life Real Estate Podcast. We are now in the first week of August, and the July real estate market data is out, and we are so excited to share it with you today because it is really exciting numbers.
Yeah, the market has really picked up. June was a tremendous month, but July came out as even better. Just at a really, really high level, we're seeing a lot of activity across all property types, especially the single-family market and townhouses.
Absolutely. So I think what we generally do here with our market data is we're going to start with GVRD as a whole and talk about all property types combined. So just to dive right in here, average sale price of a typical Vancouver home last month, $1,031,400. This is a 4.5% increase year over year. Meaning back in July of 2019, average home price was about $987,000.
Wow, that's a significant jump. And I keep saying that every week here, considering the pandemic and the things we're going through. I find it absolutely fascinating. The economy should be slower, or at least the housing market should be slower. But I think COVID has really put a spotlight on property and how people are using it and what they're thinking about it going forward, right?
Mm-hmm, absolutely. We're seeing, let's keep in mind here too, this is all basically interprovincial and international property transactions. There's a decade low foreign investment coming into this area right now.
Yeah.
And of course, we're at an absolute minimum of migration. So where's all this money coming from? Where's all these transactions coming from? It's all local deals that are happening. And I think kind of like we touched on before, it's a lot of people have changed their interest in what type of property they live in now based on the realities of COVID.
Right. So there was already this pent up demand, right? Before, as we started the year off. I mean, like we've said before, we had a price correction that we were going through over the last 18 months, and then COVID happened. But as that was building, there was a lot of pent-up demand. The prices dropped by, on average, what we saw between 15 and 20%. And then you had buyers on the sidelines that have been jumping in. And, as kind of COVID has stepped back here and the province has reopened, we've actually really started to see a surge in buyers now.
Yeah, we started to see property prices bottom out around summer, September-ish of 2019.
Yeah.
So since then, prices have largely been on an incline. And, we started to see in the last couple months, average property prices kind of plateaued, and we even saw a bit of a dip in June. But the reality is we just saw a 0.6% overall property price increase in July.
In 1 month.
And this actually takes us now to the highest average property price since November of 2018.
Wow.
We're at a 21-month high in property prices right now.
That's pretty fascinating.
That says a lot, especially considering, like we said, foreign capital and migration is at decade, if not decades, low.
Totally. And if you actually look at the region as a whole, not just Vancouver, but the Fraser Valley, it's the best month in 3 years.
That's it.
Right?
Yeah.
Which is a fascinating story.
And when we say best, we were talking about the highest sales volume.
That's right.
And best or highest priced in that 21 months as well.
But it doesn't end there because actually, I believe we were up 9.4% in terms of total sales volume compared to the 10-year average too.
And that's a big indicator, right? Because we've been coming off of low basis points for months and years now, essentially.
Yeah.
And that's why all these bigger numbers weren't all that exciting. But to see us at almost 9.5% above a 10-year average, that really does speak volumes.
Totally.
No pun intended.
Okay, so...
But 36-month high, and 22% higher than last year.
Yeah, which that's big, considering everything that 2020 has thrown at us.
Yeah. We're talking, over 3,100 homes were sold last month, and with our average sales price that we just touched on, $3.4 billion in real estate sold last month?
Is that it?
That's it. Yeah. No, these are
big numbers.
I think these numbers shocked everyone.
Yeah.
I don't think anyone, even as bullish as some people were, as much as you can be looking at a global pandemic, I think these numbers are surprising everybody.
I would agree. I think what's interesting is I was actually out with a client the other day, And when I was talking about the numbers, he even wondered if they were going to get even better as things potentially get worse in other places around the world.
Yeah.
Which is a concept that, I don't really think I thought too much about.
Yeah.
But as things, potentially get worse in the States, are we going to see more requests for immigration and things like that from the States, not just say from Hong Kong or other places around the world, right?
I would think absolutely. And I even have a few examples of exactly just that.
Yeah.
A very close personal relationship of mine is trying to get out of the States for many reasons, but, Vancouver's never looked better from their standpoint.
Yeah. And further to that, we've got family members and friends that are in San Francisco that literally work for some of the biggest tech firms in the world, and they no longer need to be in the States, not just go into the office anymore. They don't even need to be in the States anymore. So we're seeing now families that were down there on work visas are coming back, right? So there's, they're going to be looking for places. They're going to be looking for homes.
That's
right?
it. And the thing is, too, the rate of increase is absolutely increasing right now, meaning that in the second half of July, it saw a 40% increase in sales over the first half.
Wow.
And the same thing happened in June.
Yeah.
So we're seeing this
surge.
almost like straight upward trajectory of increase in sales volumes. And yes, we're in the first week of August. In the first 7 days, 600 properties sold. So we're on pace to do very similar numbers to what we just saw happen in July.
Yeah. So if you are looking for a property, it's time to get in there. We've seen behavior like this before. So if you are thinking about getting into the market, you are thinking about buying, it is time.
So I think also part of what is driving this increase in sales is the increase in inventory. Because you need good homes to sell for people to want to buy them.
You do.
A lot of homes that aren't as attractive or desirable are going to sit, but the well-priced homes in good areas, in good condition, they're, as we've just noted, they're pretty much flying in the first week.
Yeah. However, with that being said, when you compare the increase in supply that we currently have based on last year's July, we're actually down by 15%.
So overall inventory, while it's finally increasing off of a very low baseline, we're still well below a 10-year average.
Yeah, exactly. So why don't we jump into some of the property types here?
Yes, we will. But just before that, we definitely need to point on this. Sales to active listings ratio.
Right, of course.
Is at 26%, 25.9, but 26%.
And that's the average for all property
That's
types.
all combined. And do you realize that means all property types are currently in a seller's market? And, the ratio basically says anything above 20%, you can expect upward pressure. Anything above 20% is a seller's market. We're also up 9% over last year as far as the sales to active listings ratio goes.
Yeah, and that's always, guys, the leading indicator to price, right? So as volume continues to move up and supply, while it is increasing month over month, it's generally down year over year. The next thing we're going to see, the next pressure point is likely going to be price, which we've started to see started to move.
Exactly. So let's do a little bit of a deeper dive, like you mentioned. So we largely transact in Vancouver East and West. So we'd like to kind of share some numbers for those regions. Let's start with Vancouver West, and let's start with detached homes.
July 2019 saw a average sale price on the west side of Vancouver for detached homes at $2.946 million. We have seen an increase of about $107,000 year over year to a new average price of $3,053,000.
That's 3.5% increase year over year. It hasn't been a steady rise, but overall, I'd say 9 of the last 12 months have been upward as far as your prices go in the Vancouver West detached market.
That's right. Now, if we actually look at the quantity that sold, July 2019 saw roughly 80 homes sold. And in July 2020, we saw 77. So, a small change in terms of variance, but really a moot point.
Pretty much balanced there.
Yeah.
Listings are up though, which is great. We're up about 16% year over year. This put 214 new detached homes on the market last month.
Right. And but this is, even though that number has increased, your total inventory compared to last year, as we've already talked about, is actually down by about 26.5%. So where we were at last year for July was 741 homes for sale. we're now down to 545.
And that's always going to be a driver of upward pressure on prices.
Yeah.
Low inventory means people are basically battling for what is out there.
Yep. And then the sales ratio at 14.1%.
There you go. So that is considered balanced.
That's right.
For that market, for that property type.
However, even though it's a slow, long look at it, you look at the year from before, and we were at 10.8%. So the trend is on the way up.
That's correct.
It's a slow trend, but it's a trend on the way up.
Okay. So we went from basically from buyer's market to balanced market within the last year.
Correct. Yeah.
Got it. Okay. Let's look at townhomes now for the same area in Vancouver West.
Right. So last year we were at 1.14 million for your average price point, and now we're up about 2.2% to 1.139. So a change of about 25,000.
Okay. So decent increase there. Again, people are still up from where they were a year ago.
Yeah. It's seen a little bit more maybe in terms of up and down, but the actual change in price hasn't been all that big.
Gotcha. And when it comes to the other stats, Vancouver West townhomes are acting very similar to Vancouver West detached homes, where we saw literally no change in homes sold from a year ago at exactly 48. So very consistent there. A slight uptick in new listings. We had 102 new listings last month, which is almost a 13% increase. But again, inventory, 22% down in inventory over last year.
Yeah, and then the sales ratio, again, is climbing steadily. But this is a little bit different because we are seeing actually now a sales ratio that went from a balanced market last year to a full-on seller's market at this point.
There you go. Up about 5% over last year.
Yeah, we're at 22% sales ratio now. So just before we jump into the next property type, Dan, why do you think stats for townhomes are very similar to stats for single family? Is it because the consumer is essentially seeing a similar product, maybe at a different price point?
That's exactly it. The demand to kind of move up or move into that type of property is, I'd say, equal, and it's just about affordability, right? Obviously, we're talking about a big difference in price point, by literally a couple $1,000,000 here. But people that want to have a little chunk of land, they want some outdoor space, they want a home, but maybe they're in the townhome bracket as far as affordability goes. So both of them are similar demand. It's just a matter of what's available in price point. And again, that's Vancouver West. So.
Yeah, and I think that's in line with the move we've seen in terms of the way buyers have changed behavior, right?
Exactly.
Okay, let's look at condos because condos are very interesting right now.
Vancouver West condos. Year over year is sort of the first number we'll look at, and it as well is up. Actually, it's up 5.3%.
Yeah, and this comes as a bit of a surprise to me.
Probably to a lot of people,
mostly because as typically as other property types gain interest or gain in popularity, something typically has to fall, right? But here we're seeing even interest rise across all of the property types, and condos are showing a similar bump and gain that the rest are.
That's exactly it. So, we're up about $42,000 year over year, which, we're at $794,000.
That's pretty impressive.
A year ago, that same condo was $752,000.
Yeah. And if we look at the year over year changes in terms of how many sold in July 2019 versus this year, marginal change of about 4% down, right? So 353 sold last year, 339 sold this year.
Okay, but new listings. We're definitely seeing a spike in new listings here.
Yeah, and it's a big one, right? 30% increase year over year.
People, we think, are largely offloading condos to move into your townhome and, when possible, detached market.
Yeah, very much so.
We're still below 10-year average as far as inventory. We're almost the same as last year. But again, we are seeing a 2-3 month spike in listings in this property type. I think that's going to continue.
Yeah. The sales to active ratio, though, is something that Dan and I have been talking about now for a few weeks. We've kind of identified that we do believe that while condos are up overall and still quite healthy, they are trending down. Right. And, the sales ratio this time last year for condos was 21.3%. And this year, it's only down 1% to 20.3%, but it's still a trend down,
Yeah.
right? And it's something that is not going the same direction as the other property types.
That's it. So definitely something to pay attention to. We'll quickly touch on the reasons. Again, we think people are trying to move out of condos for strata and insurance reasons, and also livability reasons.
Density,
If you live downtown because you want to walk to work, now you can work from home. So you want to double your square footage for the same price. People are certainly leaving the condo market for larger properties, we're seeing.
And that's not just subject to Vancouver. We're seeing that across.
It's global. Yeah, absolutely.
That's happening in a lot of cities, right?
Okay.
Cool.
That's Vancouver West. So let's now dig into Vancouver East. Again, we'll start at the top with the detached market, which I'd say Vancouver East detached homes are probably the most sought after property type in GVRD right now.
Yeah, I think if you've got a healthy capital and you're looking for a decent investment, this is your asset class right now.
Yeah, we're looking at 13 straight months of property price increases for the detached market in Vancouver East. Year over year, we're at 8.9%.
Wow,
big number. I mean, that's $132,000 change since last July.
Yeah, and how robust is that, considering, again, that we've done that in a pandemic?
Pandemic, right? A year ago, you could buy these homes for $1,355,000.
Yeah.
Now you're at $1,487,000, $1,487,000 for that same home a year later.
It's funny, you look at that price correction that as it came down, and then people started jumping in at the early part of the year, and then, oh my goodness, the pandemic, instead of it literally falling off a cliff again, it actually went the other way and continued to rise, arguably at an even, it flatlined for a little bit, but then it started to rise faster than it was going before, which is very interesting.
Very impressive numbers. So let's now look a little deeper at the other stats that are happening and what's driving this upward pressure in prices.
Totally.
Okay, homes sold. We're seeing 26% more homes sold than last July.
Yeah, so by comparison, 104 homes sold last year in July 2019 in Vancouver East, and we're seeing 141 that have sold this month, or July, that is, right?
Yep.
Newly listed is up, as well as sellers all recognize that they're getting good money for their homes, so they're starting to put them on the market here. New supply is up by 18.8%, nearly 19% year over year.
Here is, again, the big driver of upward pressure in prices.
Yeah.
38% decline in inventory over last year.
Yeah, that's, if you'll ever want to know why home prices go up, it's lack of supply, right? Especially now, you've got pent-up demand, you've got an asset class that, if you can afford this and it's going to change by 8% in a year, you're looking at a minimum of $100,000 that you're going to make, right? And that's just looking at it from an investment perspective, let alone your lifestyle perspective, which is what a lot of people are moving towards now, and valuing that, pricing the property according to how they're going to live their life there, right?
Just to kind of break that down to the hard numbers here, that last year, if you were shopping for a detached home in Vancouver East, you had about 711 properties to look at. Same time this year, 439.
That's a lot less.
A huge reduction. And of course, the sales ratio is a huge talking point, because this is one of the biggest we've seen for this month.
And a huge jump too. Yeah. So July of 2019, we saw a very balanced market for this asset, 14.6%. We are without a doubt in a seller's market at 32.1%.
Yeah, it jumped more than doubled, 17.5% increase in your sales to active listings ratio. So 32% well in a seller's market. We hear all the time that anyone offering on a detached home in that area, almost guaranteed to be in multiple offers right now.
Yeah, well, to this point, last month we did a deal above $2.5 million, and it sold in one day on the market, right? So there you go. There's
less than 3 months of supply for this property type right now in that area.
Yeah, so you're going to continue to see some price bumps there. Okay, let's check out some townhomes.
Townhomes acting a little differently. This one's a bit of a surprise to me.
Yep.
Up year over year, great. The average townhome last month about $888,000 to purchase. This is up 3.6% or $32,000 from a year ago.
Right.
But if you do have a look at this chart, we are on somewhat of a downward trend for about the last 6 months.
Interesting.
Yeah.
And I have a few thoughts as to why that could be the case. I think, for one, a single-family home in East Vancouver is significantly cheaper than a single-family home in West Vancouver. And likely, if you were looking for a home and you were thinking about West Vancouver, you can afford, certainly, in East Vancouver. So I'm wondering, if we're actually seeing customers that would typically have bought on the west side now buying on the east side.
Right.
Two, if you look at single-family homes that actually have a suite as well, and you can gain $2,000 a month in income, that increases your borrowing power significantly. So if you were at the $1 million price point, or you were looking at a nice townhome, and you realize now that you can actually get up to 1.3 with a helper, maybe now you're thinking of making that jump, especially when prices interest rates are at record lows. Right?
That's just it. Let's say that's your budget, and you're like, well, we could go townhome in Vancouver West, but look, we can go detached in Vancouver East.
Right.
And for some people, maybe that's far more appealing.
I think so. I think based on all the stuff we've just talked about in terms of why people are buying property, I really think it falls in line with that.
There you go. So townhomes sold last month, 17% increase, which brought it to 29 units.
Yep.
Newly listed had a big jump, though.
Yes.
We saw 75 townhomes listed last month, which was almost a 50% increase year over year.
Yeah, that's pretty significant. Also, might have something to do with softening numbers in terms of price point, right?
Of course.
Supply, there you go, is coming up, right?
Definitely off a low baseline, of course, right? Because we're still seeing, even after that jump, inventory is basically a push from last year with 97 units available.
That's right, which is, it was 101 year before, so relatively no change there. However, the good news is that the sales to active ratio is up and trending up, right? So we're at a sales to active ratio of 30% here, which is still quite an active seller's market.
Yeah, so sales ratios in sellers, but we're seeing slight downward pressure on prices, which is contradictory to what we're normally used to seeing.
Yeah, it's a bit abnormal in terms of your fundamentals. But again, like Dan said, when you've got asset classes where I was buying a townhome on the west side, maybe I can buy a different asset class on the east side for similar money, I think that's where we're seeing our gap in data here.
Okay, so let's look at condos now in Vancouver East.
All right.
Again, prices are up.
Yes.
About 4.5% over last year, bringing your average Vancouver East condo price to $590,000.
Right.
Up $26,000 from a year before.
Yeah, which is great performance, and actually starting to buck the trends that it's been doing for the last 3 or 4 months.
Yeah, again, we know price is a lagging indicator here, and once we saw prices flatline and start to dip, it really led me to believe that prices would probably continue downwards. But here we go. July has just bucked that trend. We're lagging indicator. I mean, these are pandemic prices, let's call it, right? Like we're not seeing a collapse by any means. And now that we're seeing an uptick and we're up in all assets across the board here, it's really fascinating and something to pay attention to. Yeah,
I mean, Vancouver's doing its Vancouver thing.
Yeah, so true. Bucks a trend yet again.
Yeah.
So sold, 156 condos sold last month in Vancouver East. Definitely an uptick.
Yeah,
almost
18.6. Yeah.
That's impressive. And here we go. We're talking about new inventory, just like Vancouver West, almost a 37% increase in newly listed condos over last year. Yeah. But inventory almost exactly where it was a year ago.
Yeah.
So low baseline, people are finally listing, and new listings are selling.
Yeah, and people are getting decent money for them, right? And I think that's why we're seeing the surge in listings as well. Very healthy sales to active ratio, very similar to townhomes at 30.4%, up again 5.8% from the year before.
Okay, that is the resale market for East and West. What we also like to touch on, too, is a little bit of insight into the pre-sale market. This is a market that could not have been hotter 2-3 years ago, but has been hit extremely hard.
Yes.
And has seen sales obviously decrease dramatically, more so than the resale market. That said, it is picking up, unquestionably. Very similar to last month, the pre-sale market saw a 14% sell-through rate. So there were about 221 units newly brought to market last month. 14% of those are selling. June, there were 7 new projects. July, 6 projects. And August, we are expecting another 6 projects to come online for the.
And that will equate to roughly another 600 units that'll hit the market at some point.
Combined, yeah,
Yes,
between July and
combined.
August,
Yes,
yeah,
yeah.
220, 330 a month-ish.
Yeah.
So, I mean, honestly, developers are still holding back, understandably, right? We would normally see almost maybe double the amount of projects coming online right now, but they're watching the market too, right?
Yeah.
They're not going to release product into a market that does not have demand for what they're selling.
Totally. But we are seeing that demand increase,
Yeah.
right? Especially for, I think, bigger properties as well, right?
For sure, yeah. Townhome pre-sales certainly have demand right now. So people that are, or developers rather, that are sitting on that potential inventory may be inclined to release that sooner than later now. And, again, it will be completed, but should these resale numbers continue to uptick at this pace, I think we will see some significant release of new condo projects and townhome projects from developers come online in the fall and winter.
Cool. Okay, well, should we talk about our notable property of the month, which is seriously notable?
Yeah, this is a fascinating one, and I think to even frame this, I'm going to get started by saying in 2020, there have been 26 homes that have sold over the $7 million price.
Right.
What is most fascinating is 8 of those sold in July.
Wow.
It's like, that's 30%.
Yeah, right there in 1 month.
Right there. So, and this is local money, most likely. It doesn't appear to be too much foreign investment. There will be some, but not too much.
Yeah.
It's not immigration money coming in.
No,
These are local.
down. Yeah.
So 8 of the most expensive homes sold all year were sold last month.
Right. These are people that were thinking about getting a lot of space.
Yeah. And so the notable property of the month, beautiful home.
Yeah, stunning.
Yeah, this is a Shaughnessy home. 1389 The Crescent is the address if you want to look it up. This home was listed for $17,280,000. It went into multiples.
Yeah, it received 2 offers, which is incredible at that price point on the same day.
It sold for over asking price.
That's right.
It set a record. This is the highest sale price on the MLS for all of 2020. Again, listed for $17,280. It sold for $17,400,000.
Yeah. And believe you me, if you can get onto Google and see the pictures, go and look, because this is a hell of a property. But that aside, what we're really talking about is we're looking at multiple offers at the $17 million mark in a pandemic environment.
Yep. And again, another 8 homes that sold up over 7 too this month. And for all these people that like to think assessed value is market value, this home sold for $5 million over the assessed.
Sorry.
So yeah, it's just, again, right. We've talked about it a lot, and people imagine coming in here and thinking of making an offer at assessed value.
Yeah, it's it really is a simple tax indicator, right? It's really, it only has a very little bearing on the actual price of the property, especially in the luxury market.
Okay, so what is also driving prices? Mortgages and interest rates.
Cheap rates.
So the Bank of Canada has basically come out, and the governor, Tiff Malcolm, has come out and basically said, we are going to keep interest rates at the absolute rock bottom for the next 2 to 3 years.
Yeah, I mean, he actually used the word unusually clear.
Yeah, when's the last time the Bank of Canada all but guaranteed a rate for 2 to 3 years out?
Yeah, I actually think it's a really smart move in terms of helping people get their investments together, and whether it creates some stability, right? And that's, as we know more than most, that if you can create a stable environment for money and investment, you'll drive business, right? And I think that's very much what they're trying to do here.
Yeah, the Bank of Canada is doing what they can to stimulate this once-in-a-lifetime economy, right?
Yeah.
So the country's in trouble in some senses of the word, and they're doing what they can to say, look, if you want to borrow money to make a large purchase right now, we'll do our part by keeping your interest rates low and as affordable as they can.
Yeah, well, ultimately they have $82 billion plus to pay back, right? And by keeping interest rates low, you encourage spending and you encourage investment, and there's tax dollars there, right? So it's in everyone's interest, I think, to have those rates low, so that we can continue pressing forward, especially in the real estate market.
Banks are following suit. Last month, we saw HSBC come out with a 1.99% interest rate mortgage.
Yeah.
Guess what I heard today?
What's that?
The TD is offering a 1.69 variable. I mean, not in my lifetime. Not in my lifetime has it been that low.
Why would you not take that?
It's pretty enticing, isn't it?
It's relative. I'm never going to say free money because that's not a thing, but it's pretty close.
Yeah. Imagine borrowing money at your 1.69%.
Yeah.
And what did we just see? The average house is up 4.5% every year.
Yeah. Well, you're making money on your borrowed money.
That's what the idea is.
Right.
Yes.
And that's a low number. If you're in Vancouver East and you own a detached home, it was more like 8.5%, 9%, right? Mm-hmm. Anyways, cool.
So I want to touch now on Canadian employment. So these numbers sort of just came off the press here earlier this morning, so I'm going to have to look over and reference them. But employment in Canada grew by 419,000 jobs in July. Combined with May, which had 290,000, and June at 953, we're looking at an increase of 1.3 million jobs in the last 3 months.
So it's an interesting number. I guess what I want to ask is, are those a lot of those jobs, are those people returning to work?
Well, of course, yeah. These aren't really new jobs.
Yeah.
These are jobs that I think were on hold that are now
saved.
back. There you go, right? But here you go. We lost about 2.7 million jobs in March and April.
Full-time jobs.
2 month, decrease. But now we're seeing a 3 month recovery where 50% of those jobs are back.
Yeah.
In 3 months.
And that's likely due in part to a lot of companies actually telling their employees, look, we got to work from home, right? We got to figure out a way to keep working here. And, with the repurposing of real estate, you're seeing people getting their jobs back, or at the very least, figuring out how to get back to work.
Mm-hmm. The industries that are leading these jumps are actually accommodation and food services, right? Mm-hmm. So we saw a lot of
delivery,
hotels, food, of course. Restaurants started to reopen.
Yep.
This was followed by information, culture, and recreation. So people that, that maybe they're not traveling to Europe for their summer vacation, but they are doing something locally, renting boats, whatnot. There you go.
Like that, yeah. I think actually we did that. Anyways, so Canadian employment is definitely coming back. Mortgage rates are very low. Prices are climbing.
We can touch on the retail sales as well, because
Sure.
I found this one very interesting. The clothing sales is leading the retail recovery.
Interesting.
Yeah, they saw something like 116% increase in sales from the month before.
Well, that's great news. That's putting people back to work, and that's people spending again, right?
Yep.
That's what we want to see.
Following that was your sporting goods, your hobbies, that kind of things, books and music, which is great. Again, people are keeping themselves entertained.
Yeah, they're at home, right?
Yeah. And this one I found interesting too. The third leading retail sales industry was home furnishings.
That actually doesn't surprise me.
Right? People want to improve their living space.
Yeah.
So let's say maybe you can't make a lateral move or move to a larger home or whatever is interesting you, but you're going to take your space and you're going to beautify it because you're stuck there.
Yeah, or you're going to make it more efficient, or you're doing something to that effect. Yeah.
Mm-hmm. Okay, so that basically wraps up our market data report for what happened in July and the sort of economic drivers of what is causing these numbers that we are seeing. So Ryan, what's going to happen next? What should we expect for, let's say, the next quarter, the next 3 months here?
I'm just going to rub my crystal ball for a second here, because I really think, and I still hold to this, that trying to project even further than 3 months at this point, as we're discovering with new stats coming out on the monthly, it's difficult, right, to be accurate right now. So projecting further than that doesn't make a whole ton of sense. Besides, when you do look at maybe some of the notes from Canada's top doctor, we don't really know what's going to happen with COVID come November, December. It's going to get a little different, right? It's going to be a bit more of a battle. So that being said, if we just look at the next 3 months, I think a lot of what we've seen in the last 2 months, we're going to continue to see in the next 3 months here. you're going to see people that are still going to be putting their condominiums on the market, trying to make a bigger jump into townhomes if they can, into single family markets. People that were thinking about buying on the west side in a townhome may consider a full-size home on the east side. I don't think you're going to see a huge change in the borders with the amount of people coming through right now. Certainly with cases still doing what they're doing in the States, I don't see that opening up. So I think what we're going to see over the next 3 months is Vancouver dealing with its pent-up demand, and a lot of buyers making the changes that we've just talked about in the podcast, right?
Mm-hmm. I think, of course, the Bank of Canada, government, banks, they're all going to continue to keep the housing market elevated. Yep. They're going to do what they can to support it.
That's right.
So I think we're seeing people take advantage of that knowledge.
Yeah.
They feel like, okay, now if I buy now, I get this low rate. We've seen that the powers that be are really going to try and not let prices fall.
No.
And I think, sure, we've got the mortgage deferrals are going to come to an end soon.
Yeah.
Again, I think those who truly need it might even get an extension. Mm-hmm. So I do not expect to see any kind of cliff action there where suddenly we are flooded. We have a flood of properties into the market because people can't afford their payments anymore. Yeah. Again, most jobs are back, and let's keep in mind that the jobs that are back were largely for the lower wage income earners, meaning these were largely not property buyers in the first place.
So is there potential to see maybe rental values come back a little bit here, or are we going to continue to see that depressed for a little bit?
Locally, I think what's going to change rental rates is if people take back their Airbnb properties from their long-term renters.
Right.
It's always going to be supply.
It's an inventory thing.
That's it. Right now, supply is, I believe, at a 3-year high. Mm-hmm. So rental rates, understandably, have come down.
Yeah.
So what will change that? Well, we don't see tourism anytime soon. It's all going to be, inter-provincial tourism like we're seeing, right? That's why massive jumps seeing right now in like cabin and vacation home sales.
Yeah.
These are selling 20-30% higher than they were last year. Yeah. Dollar value.
And that to me honestly doesn't surprise me at all. No. That's just a function of people trying to do something and not sure what they're going to be able to do for the next few years, right? So I think, drivers being low rates, pent-up demand, lower supply, even though it's up month over month. I really think a lot of what we've seen, we're going to continue to see for the short run.
Thank you guys so much for listening. Any questions, comments, please leave them below. And thank you as always for listening and watching.
And see you next week.